Obviously, the tariff news is dominating in the news front, the fundamental front for the U.S. dollar in trading here today. That has led the euro versus U.S. dollar and sterling versus U.S. dollar to lower levels or a higher dollar. The dollar versus yen is a different story. It initially moved to the upside with the dollar moving higher, but has since reversed and is now lower on the day. So I'll go through the technicals that are driving these currency pairs from the fundamental news that is the dominant force. But don't underestimate the technicals. They tell you the roadmap for your currency trading. So let's get started. Admittedly, last week, the price action was a lot of ups and downs. After the first initial move to the downside, we saw a move sideways after a sharp move lower, and then a move lower and higher and lower and higher, and then lower and higher and lower and higher and lower and higher. You get the point. On Friday, the high price that we saw right here tried to get above the 200-hour moving average. That's a green line in this chart. But if it ran into this resistance level, this resistance level was defined by different swing highs through here, 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 here. All these help form this ceiling, form this risk area. We tried to break to the upside here, but failed, and then rotated back to the downside. Use that level as resistance once again here before basing and using the level as support, moving to the highs. It got a little messy through here in last week's trading with the volatile up and down, but stayed below the 100-hour moving average up through here. Then on Thursday, we did see a rotation to the upside that tried to extend above the swing area up here, failed, and then rotated back to the downside and back below the 100-hour moving average, back below this swing area through here, and also the 200-hour moving average, the green line in this chart, and once again came up to that 200-hour moving average right through here and found willing sellers against that level, pushing price to the downside, closing below the 50% of this move to the upside in the process, which was a little bit of a negative bias, but the gap lower in trading and today saw the price just zip up below those levels. And we also fell below this swing area right through here between 1.0332 and 1.0343 in the process, and the 61.8% retracement. Now, the low price did also fall below some levels on the downside, but you can imagine that this trading was, or not imagine, but know that this trading was very volatile, and even though the price fell below these levels right here, what we didn't do is extend down to our low price that we saw in the month of January, down at 1.0177. The low price came in just above the 102 level, right? Probably around the 102, 15 or 14 type level on the downside before basing, not once, not twice, but three times around that, let's say 13 level before moving back to the upside. We are seeing this rebound higher in trading here today. And I'm going to put Fibonacci retracement just for giggles from our high price that we saw on Friday to the low price that we saw in trading here today. That was a big move to the downside. The 38.2 comes in at 1.0295. And that's going to be a level perhaps that we're going to watch on the top side just in the short term if the price can stay below the 38.2% retracement of this fast trend move to the downside. That would say to me that the sellers are keeping control. The sellers are leaning and keeping the pressure on the pair. So use that as a close risk level. If we do hold that level, then we should see a rotation back lower. If we do break above that level, we could see the price back down toward the 61.8% retrace, maybe the 50% of this move to the downside. That's how I play it for this pair. But this area right here is also going to be a level that we probably don't want to see the price move back above this swing area. It actually goes back to way back here. You see how we have a swing lower here, swing low here, swing low right here. This forms this floor in this area right through here. Fell below the floor and on a number of different times. But that last thing we did was hold support here before moving to the upside. We gapped below that level and trade here today. So that's going to be, as we move on, maybe not today, but later this week, this area is going to be key resistance for the euro versus US dollar. So be aware, be prepared. Let's take a look at the dollar versus yen next. And the dollar versus yen, as mentioned, initially moved to the upside and trade here today following the US dollar higher, but then rotated to the downside, and after coming down to the 200-hour moving average, was able to break through, and then down goes Fraser. 1, 2, 3, 4 separate hours to the downside as the market extended lower with this, the traditional risk-off sentiment trade, where you see, basically all the other currencies show the dollar strength, whereas the dollar versus yen shows weakness. The move to the downside saw the price move below the 100-hour moving average and the 38.2% retracement. The broken 38.2, that broken 38 is how the move up from the December low to the January high. 38.2% retracement comes in at 154.939, and also this swing area right here is now going to be resistance just at the top of that 38.2. This level is defined by different swing lows and swing highs through here, or swing highs and swing lows, I should say. And then we reestablish the level as a support through these levels right through here before breaking to the downside and basing against a level on the move back to the upside here, here, and here, staying above that level before moving lower. And finally, on Friday moved above that level and then tried to move higher away from it and trading here today. But we're back below this area right here. This level is now close resistance between 154.77 and 154.97. So watch that level on any sort of corrective move to the upside to find sellers against that level to keep the bears more in control. Finally, let's take a look at the sterling versus US dollar, and like the euro versus US dollar. This pair gapped to the downside after some up and down volatile trading that we saw at the end of last week. Just saw the market move up, down, up, down, up, down, up, down. We sort of made a mess of the moving averages. It wasn't necessarily the best of technical type of trading. When the market non-trends like that, you tend to chop up things like moving averages, and that's what it did for the most part in last week's trading. But we did close below both the 100 and 200-hour moving averages on Friday. Not to say that that was go forward, be short the currency pair, long the dollar, but it was still a negative bias. We did gap below this swing area, and we're trying to move back up toward that swing area. That swing area comes between 1.2351 and 1.23759. Stay below that level or this area, and the sellers remain more in control, and the buyers are feeling the pain from the selling momentum to the downside. But as you can see on a positive note for this currency pair, and that has led to the sharp move to the upside, a corrective move to the upside, is that the price did hold support against this old swing area through here, where we had swing highs, mainly a swing low and swing highs right through here, forming levels of resistance or support, I should say, in trading here today. We did fall below this swing area, but the last thing it did was hold support against 100 and 200 before moving to the upside. So we'll discount that as just a momentum move to test those moving averages. So this area right here between 1.2238 and 1.22503 did its job, and it's helped to force the price back up toward the resistance right here. This area is going to be our level that we got to watch. If it goes above it, it's more bullish. If we stay below it, then we could see a rotation back to the downside for this sterling versus US dollar. So there you have it. A technical look in these volatile markets. My name is Greg Michalowski. Good fortune with your trading. Bye now.